Good morning, everybody. It's Friday, March 6th, 9 a.m. Eastern, so we have some major moves going on in markets. There's tons of capital flowing globally around the world, moving around different places, and appreciate everybody staying emotionally level-headed and organized in the chat room as always. As we're starting this morning with a big gap down open, and we're starting to look at our lows. So one by one, our weakest sectors and weakest individual names are breaking the lows of the initial dump. At this point, this is all we care about right now. What is the low of the initial dump and where do we stand compared to that level? So the fact that the financial sector has already broken to a lower low, oil has broken to a lower low, these increase the odds and increase the potential that the tech sector and that the S&P 500 are going to drop to lower lows as well. They have not yet. They have a good bit of space left. But again, we're taking in all little pieces of the puzzle, and the weaker assets and stocks, Facebook's breaking its low dump. Facebook has been telling us for 3 or 4 days now, every day, that it's weaker than other tech sector names. So it's the first to break its low. So just little clues to keep in mind. Right now, the S&P 500 broke its key level. So we were watching that level, that futures level from yesterday, SPX 500 USD on TradingView, and the 4-hour key support was here. Now, if this support was hit yesterday at 12 or 1 p.m., I would have made a play off of this support level. In my opinion, it was the most likely scenario that this support level would hold at least for a short-term bounce. Obviously, it did not, but this is the kind of scenario where futures traders have a little bit of an advantage. For example, like I said, if it's the middle of the day, I'm going to make a play off that support and look for that bounce and stop out if that support level breaks. But I'm not going to make a play off that support level overnight because I know my stop level won't trigger and I don't have the allocated risk set in stone. So I thought we were going to see a little bit of a bounce in after hours, but I took no position based on that because of my stop loss not being honored during after hours trading or extended hours. So that's just a point in favor of futures traders. If you want to fully capitalize on this opportunity, it's definitely futures where you want to be. And Lori and others and A10, and they'll tell you that's the case as well. For me personally, again, I'm not trying to be very aggressive in this market environment. If you're looking there and saying, I'm trying to change my life over the next 6 months and take advantage of this significant opportunity and I'm going to be trading up all night, if that's the route you want to take, you certainly want to be learning futures or at least getting comfortable in that environment. So with where we stand right now on SPY, I expect, and I made a prediction 2 days ago, and I don't normally make predictions, but I did just for fun, saying inside bar on Thursday morning, bear break on Friday, and now on Wednesday morning, bear break on Thursday, and then I said I'm going to be looking for a daily higher low Friday and a break of the tightening range into Monday or Tuesday. So I am still anticipating that the most likely scenario, at least for today, is to hold the low of the dump, 285.54. So looking at pre-market trading on SPY, with where we stand right now, we would need about a 3% drop to break that level. And that's a 3% drop from where we stand, which in the end would be roughly a 5% plus drop today. It's a possibility, but it's not the most likely scenario. So I would love to see weakness this morning, have the price drop down into the 288, 289 range, and then look to make a play off of that support. But again, I probably will not be swinging anything overnight tonight or over the weekend because of the potential risk, the headline risk, and all of those things that come along with swing trading in this unfavorable swing trade environment. And it's much easier to swing trade in futures because, again, your stop losses will be honored. So we're down near the low. Low pre-market for all individual names is going to be a key support level. So if we break the low, pretty much the two support levels are the low of pre-market, and then we zoom out and look at the low of the dump. And if the name has already broken the low of the dump, we're going to have to zoom way out to find the next support level. And on any bounces, we are just going to be looking for hourly lower highs to be the result of that bounce. And I'm using the after hours high. So let's just go to a random name here, Apple. So Apple didn't set an hourly lower high after the high of the day yesterday. So rather than looking at 299.55 as the key resistance, I'm saying anything under 294.40, the high of after hours, is an hourly lower high. So that's how I'm keeping things a little bit more clear for me personally. The dollar has broken our monthly uptrend that has been intact for 2 years. That is notable. When I entered my gold bull position a couple months ago, I wanted to see this pattern break. And obviously now it is following through. A weak dollar is bullish for the precious metals. So now the question is, how much pullback are we going to see from here? Looking at the 1 year time frame, we've got our big bull move, higher low, lower high, and it's going to be all about 88.25 from here on the dollar. And we'll be in a yearly downtrend if that level breaks. We're still well above it currently. So gold has a double top, 1689, and we got over it, but only by pennies. So it's a very clear double top at this point. And best case for bulls would be, in my opinion, seeing if we fail to break for this level. We had a bearish reaction to the jobs numbers pre-market as SPY bounced a little bit. But if we reject from this level, bulls want to see a bull flag, and this is a cup and handle setup. If we form a bull flag on the daily time frame, it's a picture-perfect cup and handle continuation pattern attempt. So what I would want to see is a bull flag on the daily while SPY maybe holds 285 for a short-term bounce. And then, of course, if I'm bullish gold, I want to see more market fear. So I would want to see a daily lower high result from a 285 bounce on SPY, and then next week breaking 285 support, which could potentially end up being that cup and handle pattern. Generally, I won't look for a cup and handle until the consolidation begins, and I can point to it and say, yes, that's a bull flag on the daily. So it's definitely a bit early, but gold bulls are very pleased that we V-shaped bounce right back to that level. Silver is not even in the same ballpark as what gold is doing right now. And the gold-silver ratio, the strength that gold has relative to silver is the highest it's been in years right now. So again, just continuing to focus on gold and not interested in silver because of that fact. Bull miners were looking for a gap up open, but pulling back in response to the jobs numbers as well. 33.76, the high of yesterday, is going to be tested first thing. I'll be watching the hourly uptrend. We have support of 32.88 and 32.79. Because if we lose the hourly uptrend, that's when we're scouting for the daily lower high. So certainly still looking for this daily lower high as it is so far away, but have to lose the hourly uptrend to see any kind of shift in momentum back to the bears, as we will be looking for dust and bear miners to give us a daily higher low compared to the dump low. Oil, so dropping to the lower low on the daily. Bear flag on the daily is confirmed. Not a ton of follow through at this point. 4-hour RSI oversold. We're just looking for a 4-hour lower high on any bounce. And big picture, key levels are coming up now. 42, you can see the price action in the 42s, then 39, and then a lack of support again. So oil is obviously very weak right now, and we'll be watching the 4-hour and daily downtrend, which remain very clear. Natural gas, daily lower high is set. Bulls need to change the 4-hour trend back in their favor. We're just looking for a 4-hour lower high on any bounce. The bulls would have to change the 4-hour trend back in their favor for any daily higher low to form, but certainly much more likely to form a daily higher low compared to oil, obviously, as oil is dropping to lower lows, and natural gas bulls still have some space for the daily higher low to try and form. Bitcoin has been going up the last few days, which is a sigh of relief for the cryptocurrency bulls, because we were dropping when the market was dumping last week, and everybody's saying, hey, wait, I thought this was supposed to be an uncorrelated asset and a bit of a safe haven, and bulls are hoping that that narrative gets regained. At this point, cryptocurrency bulls just hope to trade sideways while the market is dumping, because again, as long as it holds its value while other things are losing value, it leads to the case that it's a decent place to put money when there is extreme fear. So we'll have to keep monitoring that. Obviously, that is an ongoing developing story. So for me personally today, I'm just watching SPXS and SPXL as usual. We are down at the low pre-market on SPY right now. First thing, we have some clear 5-minute lower highs to be watching. We'll check back in right before the bell rings to see where we stand. We're going to be starting with some weakness initially, but we're going to be looking at the lows of the dump for a potential support play. And if we were to head down to the low of the dump in the upper 280s or mid 280s, SPY on the hourly time frame this morning would start to be getting crushed. That would have us in the teens and actually probably approaching low teens. So I will absolutely be looking for a bounce play off of those levels if they come into play today. So we got BB. So BB was weak yesterday, gap down open shaping up today. I would consider anything under 475 as an hourly lower high, and we are in free fall. Breaking 486 means there is no support nearby. And the fact that this is pretty much close to a penny stock here and in a downtrend on all time frames is certainly a big red flag. So bears have absolute complete control, and the hourly downtrend will be our guide. And when we change the hourly trend, we will just look for a daily lower high as well. Cost had an earnings reaction, and that earnings reaction was pretty muted, not really convincing in either way. Now we're seeing some weakness. Likely the market drop has to do with that more than the earnings reaction almost. but we're looking at anything under 324.51 as an hourly lower high. We can look at the high of the reaction after hours as well, just under that. And if we see a break of the low of the reaction, once the bell rings, 311.72, then 310. And again, double top, I consider that a double top at 325. And now we look for the daily higher low to form. Tons of space for the daily higher low. Oil in the financial sector are already dropping to lower lows, and we can see cost is nowhere near doing that. It's definitely one of the stronger names. PTON. So PTON bulls are trying to form a higher low compared to 24.52. Lower open is coming, 25.85 low of yesterday and 25.78. Key little double bottom of support. So I would be looking at low of, what day was that? Wednesday. High, higher low, lower high, trying for another higher low as we see a tightening range over the last couple of days, all about 25.85 support. And if we get a bull move holding that level, we'll be looking for a lower high compared to 27.18 for a continued tightening range. So if I attempt to bottom fish 285 support, I'm not swing trading anything. Again, there's no reason for me. I've been keeping it very simple for myself personally over the last few days, and I'm just locking in day makers, and that's all my mindset is. Last week on my SPXS swing was a solid win, and that was a few week makers, but I'm back to just focusing, as always, just give me my little day maker every day, and as long as I'm continuing to grow my account by a small little step forward while the market is dropping, I am ahead of the game, and I know that I can look for oversold bounces if things start to get extreme again. So we're not nearly extreme. I'm not going to be looking for any long-term swing positions unless we drop to lower lows and see more fear. Otherwise, I would wait for a daily trend change back to the bulls before I would have any confidence. FAZ, gap up open, bear the financial sector. So 39.41 is our key resistance, and we're not near that yet. So that just shows you that we have XLF dropping to lower lows, but we're not hitting higher highs yet, partially due to time decay. But 39.41 is the level that has to break. And if we pull back without breaking that level, it's just a daily lower high, and we may see a tightening range. So the question is, can the financial sector see an oversold bounce and save? I'm curious if FAS is still holding a higher low, which I doubt. 61. So that just shows you time decay right there. FAS and the financial sector lower lows, and FAZ not hitting higher highs yet. Have to be watching that resistance level. TOY. Gap down open yesterday, huge dump. Only nearby supports that we're looking at are 1769. That broke, so 1740. If 1740 breaks, we got nothing. We're looking back years, and we're at all-time lows already. So black dirt breakdown in a weak market with downtrends on every single time frame that you can possibly have. Just be cautious. Trying to play bounces on a name like this does not have good favorability. I would so much rather play an hourly or daily oversold bounce in a name like Netflix that's in a weekly uptrend, knowing that I have longer term uptrends as a bit of a safety net than I would something that is in free fall. If you're looking to exit a short position, you're doing two things. You're either scaling out into strength and happy with your gains, or you're using the hourly trend as your guide, knowing that you may have to sit through a 2% bounce to form an hourly lower high if you are confident that the result will just be fading back down. So hourly trend is our guide as far as short-term action goes. TVIX on the daily. So big gap up open coming, 193. Explosion to higher highs. Hourly is very overextended. Next time we consolidate, we'll just be looking for an hourly higher low. We have 5-minute supports, 187.60. And at this point, previous price levels of resistance have absolutely no bearing, in my opinion, on what the volatility sector is going to do. So I would not be looking at previous price levels to see where we're going to top out. 241 is one level, but I would just be using short-term trends or hourly trend or whatever trend you want to focus on. That's way more important than previous price levels for me. PENN. So PENN already dumping to lower lows. Definitely one of the weakest names. Gap down, open, shaping up. Where is our support level? We broke the weekly uptrend. I'm looking down at 2172. and then the low of pre-market as well. So 21.72, 21.32, and I would consider anything under 23.25 as an hourly lower high. So again, in this kind of high fear environment, the only time I'm scaling into a oversold play without a clear bottom fish stop level nearby is if I'm an really aggressive trader. Because if I'm not wanting to be aggressive, I'm waiting for an hourly trend change or at least a solid enough hourly bounce that I can say, okay, I anticipate a higher low is the most likely scenario from there. I scale in for that hourly higher low and my stop is below the low to limit my risk. And that's the same for all of these individual names. If there's pretty much the takeaway is we have to have a support level nearby because things can always get more extreme than we anticipate. And the last thing we want to be doing is scaling in to a free fall falling knife with no clear exit point. Have to have an exit point on every trade. A clearly defined one. So gold miners definitely shift their correlation between markets and gold. It seems like when the market fear spikes, that's when when it reacts to the markets more. SPCE, so the bulls must hold. We got 22.44 and 22.03. Technically speaking, 22.44 holding would keep us in an hourly uptrend. If that level breaks, though, we're just looking right back down towards that low of the dump, and there's no daily higher low being set if we break 22.03. If 22.03 breaks, we're looking right back at 19.11. So the question will be, once the bell rings, can the bulls defend these two lower supports in the $22 range? CMG. So CMG looking at a gap down open, the daily time frame already dropping to lower lows. So 7.03 was that low. Actually, I take that back. So that level is in play right at the open. So potential play, if I were going to make a play off 703, it would be 700 psychological is the level I would use. But if 700 breaks, we are looking down at a lack of any support because of how fast we ran up. There's a low at 697.85. There's a gap at 694. But other than that, just caution, if 700 clearly breaks, the bears have their complete control again. I would consider anything under 752.52 as just an hourly lower high. I would not, let's see, AMD. So hourly, we have a range to be watching. High of after hours, low of the dump, lower high at 50.20. Bulls are going to try and hold 47.89 first thing. If they are successful, we have an hourly equilibrium to be watching through the morning. So the most important levels for me are 47.89 and 50.20. And here we are right in the middle of that range. So key support test to try and stay in this hourly equilibrium. I wouldn't call, when I use inverse head and shoulders, for me, I have to see the right shoulder lower than the left. Otherwise, I'm not looking for it to be that play. Because for me, it's a most clear pattern when we're going clearly from lower highs and lower lows to a higher low, and then we change the trend. When you are forming it in a different way and your right neckline is higher than your left neckline, you've already broken the lower highs. You've already used up some of the bull buying power. And yes, you can still change the trend, but in my opinion, the bull shift is more notable and the gains are better when the break is the trend change. And when we have lower highs leading into that break. BA. So I would say BA, anything under 267.77 is an hourly lower high. You could also use a shorter term level, the high of pre-market, if you wanted to. Gap down open, low of pre-market. Very clear bear flag confirmed. Certainly one of the weaker bounce names following through. And this is a fat gap down. We're looking at 253, and then the next level, there's not much in this range. 251.17, 234.29. So all out waterfall continues. Hourly lower highs are our guide. So Tesla, we're watching the low of the dump, gap down open, 684, so all about 611 from here. And if we were to drop down with 611 being in play anytime in the near-term future, it's still 10% away. We will have RSI levels that are beat up enough that I would be interested in a play off of that support. So still plenty of space for the bulls to try and form a daily higher low compared to the dump low, but we have to change the hourly trend to do so. And again, on any bounce this morning, just looking for hourly lower highs. Shop. I would say anything under 501.82 is an hourly lower high. Again, using the high of after hours. Low of pre-market is our first support at 476. And then we're looking at the dump low of 420. Another name that has a ton of space above, any name that's still 10% plus above its low of the dump is so much more comfortable than names that are 1 to 2% above their low or are already breaking that low. So distinguish Shop, Costco, Tesla. These are all names that have a lot more comfortable daily setup than many. FEYE, strong close yesterday. A little bit of a lower open. If we fail to break 1461 resistance first thing, we're looking at 1411 and the low of yesterday, 1398 as key support levels. And we're just looking for a daily lower high. For me, I'm just considering this the same drop, and anything under 1711 I would consider a lower high. But hourly uptrend still intact at this point, keeping an eye out for a test of the high of yesterday first thing. Certainly not many names testing their high of yesterday. APPS. So anything above 655, or you can use the low pre-market. I use 655. I'd say anything above that is an hourly high or low. So high, low, double top, and looking to hold 655 to try and stay in an hourly uptrend. If we lose that level, we zoom out, and daily consolidation is then underway to find a daily high or low. If we hold that hourly support, just a continued tightening range to be watching potentially into first thing next week if 655 holds today. So UVXY is going to be the same thing as TVIX. Big gap up open, hourly chart a bit extended. Going to be looking for hourly consolidation this morning to find an hourly high or low. And as far as resistance goes, in my opinion, it's mostly out the window as far as those previous price levels meaning anything. The high of pre-market would mean something to me, 37.79. And if we reject from that first thing, then we know we're likely going to start pulling back a bit. But we have the 5-minute uptrend. So I'm looking at 36.16, 35.46 as two short-term support levels. And again, keeping in mind that hourly consolidation this morning is probably something to keep an eye out for. ZM. So ZM hourly support is 122.22. If we fail to break the high of yesterday and break that level, I would expect a daily inside bar to form today because of the size of the move yesterday. We have tons of space. So 122.22 is the most important support level. If that holds first thing, that's definitely a short-term win for the bulls. Big green candle yesterday. So bulls comfortable knowing that worst case, the most likely scenario is a daily inside bar. OPK. So OPK, hourly high or low from pre-market is 226. We're breaking the high of pre-market. So we're looking at 295 and 3 psychological as two resistance levels. Another huge gap up open is coming. And there's a gap to fill at 351. So 295 and $3. We've got a 5-minute high or low likely to form on this current consolidation. Most comfortable setup for the bulls would be to form a 5-minute high or low, open with some strength, and then have that 5-minute high or low as a short-term support level for after the bell rings. Certainly a lot of strength pre-market. 290.65 support. An hourly support level does not matter to me nearly as much. It is a level, absolutely. And if you want to keep risk nice and small and try to buy the dip first thing this morning once the bell rings, then that is a level I would use because I would not want to give as much space to 285.54. That's way too much risk. So that is a potential level to play off of. And the low of pre-market is currently 291. Roku. So Roku, anything under 116.16, just a daily lower high. 105.57 key support is breaking. So we're dropping to a lower low, and now we're zooming out to the most important 98.08 support, bigger picture. So from this point on, it's all about that support level. Bulls would love to see a lower low today with no bear follow through, which would be our second support break with no bear follow through, which would start to have us looking for a falling wedge on different time frames, perhaps the 4-hour chart. So bulls would love to break 105 and see a green day or a close higher than the open today to keep that 4-hour falling wedge a possibility. INO. So INO is the high. We are seeing a small gap up open. Hourly high or low, I would use 961, the low of pre-market. 1010. Breaking clearly, so the next level, 11 and 1162. So hourly uptrend is our guide and certainly fully intact to start the morning. MCD, gap down open. Have to hold the low of 188.81. That is now the most important support level, and that is in play today. So 188.81. Anything on the hourly time frame under 288, I would consider an hourly lower high. Key support coming up. Thanks, Roger. DIS. So DIS has already dropped to a lower low. Certainly more exposure to large crowds and all that with the virus. So gap down open. And we have to find the next support level nearby on the weekly time frame. $107.32 is the next clear level. And anything under, again, I can use either the high of after hours or the high of pre-market. But both of those levels are resistances. And that 107 level is the only level nearby. APT. So APT, we have an hourly tightening range. High of yesterday, low of yesterday, lower high pre-market. And bulls have to hold 1580 for an hourly higher low to try and form. And this is a big old equilibrium. So this is one to be watching. High, low, lower high, higher low, lower high. Trying for a higher low compared to 1580. And this has actually been... This is definitely one to watch. May not get a break today. May have a playoff of 1580. But if we don't get a break today, certainly top watch for Monday. HTBX, hourly uptrend. We got 89. We got a higher low pre-market at 97. 120 and 125 resistances. If we can't break 125, we will likely see a daily inside bar. So that high of yesterday is the most important resistance test first thing. Lots of pre-market volatility, looking for a 5-minute lower high compared to 114. Short-term support is 101 on the 5-minute chart. GOOG, so the daily support level is going to be 7, or make that 1271. And we're testing that first thing. Got to log into my account. Reminder, brokers with the open are going to be slow. We know that for a fact, for most. So we're going to test that key low first thing. If Google drops to a lower low and Facebook is already dropping to a lower low, and make note that they stood out as the 2 weakest tech sector names, I believe, on Wednesday. But if that level breaks, it increases the odds that QQQ is going to break support as well. So after 1271, we're zooming way out, and the next level is 1251 that stands out to me, and the hourly downtrend is our guide. Anything under 1326, I would consider an hourly lower high. AVGO. I may sit out the first 20 minutes of trading today. As you can tell, I'm all jacked up, and I can recognize that in myself. So 262.74 is support. Pre-market on AVGO, that level is potentially in play. And we are just looking for an hourly lower high under 278. So 262.74, key support first thing. CGC, big gap down open. We know in general gap downs give some decent bounce opportunities. There's a gap down here at 1558. That's a potential target if we were to flush first thing down to that 1558 gap. Keeping in mind the hourly RSI on CGC is not oversold. The 4-hour RSI is pretty darn beat up. So that's the difference. I would be more comfortable if the hourly was really beat up as well. But let's see, keep an eye on that potential gap fill. Here comes the open. So the low pre-market on SPY is our key first level, 291. We've got some short-term resistance, 294.63 stands out to me first thing. And on any morning bounce, if we see bulls buy this dip, remind yourself we're just looking for hourly lower highs. So definitely a little bounce right before the bell rings. We'll see if the bulls can hold it. 291 will be a potential bottom fishing play if we start with a bit of weakness first thing. But again, very high risk, high reward first thing. Make sure your brokers are working. Make sure your orders are going through or cancel them. So it is the financial sector, no surprise there, weaker than the tech sector. The biotech sector, out of the sectors that we cover, is holding up better than everybody else, both yesterday and today. As far as individual names, Netflix is holding up the best in the tech sector. Facebook is the weakest, and Apple and Google just as weak. So we're starting the morning with a bounce. We know we need a 5-minute trend change on SPY to believe any follow through. So wherever we bounce from here, we have to form a 5-minute higher low once we top out and hold 291 and then see continuation. Otherwise, it's just a short-term little bounce. APHA 325 support being tested. It just broke it by a penny or 2 pennies. So keeping an eye on that. Still a potential little double bottom there, but that pretty much has to be the low of the day if that support is going to get any follow through. And if we head back down to a new low of the day on SPY, it will be all about 291. Checking back in on gold to see how it's recovered from its reaction. Very nice recovery from the reaction to the jobs numbers. And gold's trying to give us a 15-minute cup and handle. So new high of the day, a little bit more bounce follow through. 2 little levels from pre-market on SPY to be watching. 293.60 just broke. 294.63 is pretty much the high of the reaction to the jobs numbers. So that is the most important resistance from here. And at this point, if not in on the bounce first thing, bears are watching for hourly lower highs. And again, we will still need a 5-minute trend change in SPY as well. So that's another potential play. If I miss this bounce and I do want to be looking bullish, waiting until we top out and then watching to see what the 5-minute higher low looks like, because again, I will have a clear support level to play off of on that 5-minute higher low. QQQ with a very strong start. Bit of a falling wedge on the 5-minute heading into the open. So big bounce underway. We zoom out and we look for an hourly lower high. On QQQ, I consider anything under 212.87 as an hourly lower high. That's still multiple percent away. So it's a great bounce. We're not in free fall. We're not in full panic mode. But again, it's going to take a ton of work for these bulls to change hourly trends today. So we're approaching our resistance on SPY, 294.63. We just got within 14 cents. And a rejection from that resistance level. We'll see how the bulls respond, but that is our clear short-term resistance. Very quick $1.20 plus pullback from that level. We'll see if the SPY bulls give it another test here. And again, if you're trading in the first 15 minutes, you probably want to be watching the 1 minute time frame with this kind of volatility. 1 to 2 minute time frame. Obviously making note of the longer term levels, but as far as watching this price action, I'm watching the 1 minute uptrend on SPY, and I can say when the 1 minute uptrend is lost, we'll likely see some 5 minute consolidation begin. SPY trying for another 294.63 resistance test. We'll see if bears are able to reject the price again. Right now, short-term support is 292.96 using the 1 minute time frame, as we are testing the high of the day, but we just rejected by 7 cents on the initial test. So there is a little top fish play off of that 294.63 level, but for me personally, I'm just waiting. Ideally, what I would like to see, if I want the most confident setup, I want to see a 5 minute trend change for the SPY bulls, get some nice follow through, looking for the hourly lower high, and then a loss of that 5 minute uptrend later this morning or midday would be my bearish entry signal, looking for the hourly lower high to be set. In an ideal world, that's the most comfortable trade that I see for myself today. Still testing this high. So a short-term resistance battle, first thing, testing the high of pre-market. Or actually, it's not the high of pre-market, it's the high of the bounce reaction or bull reaction to the jobs numbers. So bulls want a bit more follow-through, but it's looking like a break. And all that does is increase the odds for a 5 minute high or low once we do top out. Bulls want as much space as possible. And we are currently over 1% above the low of pre-market, which will be the level that must form a 5 minute high or low compared to. Certainly not much follow through. We only broke resistance by 10 cents. Still watching the 1 minute uptrend on SPY. Certainly some bounce in the airliners. Still watching the hourly lower highs there as well. INO with a huge start. Definitely using short-term time frames there. SPCE. So that level to hold ideally was 22.44. And we held it by a penny. So technically the hourly uptrend is still intact, but I would consider anything under 24.34 as just an hourly lower high. And all individual names on this current bounce want to see the result of this bounce as a 5 minute trend change. For us to say, okay, this is a clear hourly bounce. We're getting some follow through now. Because if it's only a little 10-minute bounce once the bell rings, that's not really convincing, and that could lead to a lot of hourly bear flags. So that is now the most important thing that I'm focusing on for the next 20-30 minutes. Can SPY bulls change the 5-minute trend? And we're still a bit toppy around that level. So far our top's 294.49, 294.63 pre-market, and we just hit a new high of the day, 294.74. So a bit of a short-term line in the sand for the bears to try and defend. So make note of who's dropped to lower lows. Gold giving back. So gold is not a 15-minute cup and handle. It's a 15-minute equilibrium to be watching on gold. Looking for a 15-minute higher low this morning. We've got XLF dropping to daily lower lows in a big way. We've got Facebook doing it. Google did it. Not by much on Google, but it did break support. SPY bulls are going to attempt 292.96. I'm going to be watching for a 1-minute head and shoulders if we hold that support. If it is a 1-minute head and shoulders, then 5-minute consolidation will be underway if it breaks. And the way that I've been trading the last few days with larger capital and just doing scalps on these leveraged ETFs, I would be using the 1-minute chart and trading off of these support and resistance levels. So if we were to drop down to the mid to low 293s, I would be making a play based off of 292.96 support. That's just the way that I've been trading the last few days, and it's been working pretty well. But obviously that requires a lot more speed and experience to use these short time frames. It's just the same patterns we use on all these other time frames. They just happen a lot faster. So PTON dumping down. It's all about 24.52 from here. Clear bear break. We had some nice support in the upper 25s that is now out the window. So it's all about 24.52 from here. So watching to see if SPY's giving us a 1-minute right shoulder. And again, if you're looking at the SPY hourly time frame, you could care less what the 1-minute chart is doing. If you're looking at the daily or the hourly, these short-term time frames mean nothing to you. And a very big pullback on miners from the start. So APT key support is approaching. Hard to see it on Fidelity here, but that hourly support 1580 is broken. 1551 is the next support. We dropped and broke that level by a penny. Decent little bounce in the MJ sector, similar to SPY. So APHA broke its key support by 2 pennies, but then did see a nice 3% bounce. So SPY is either going to see a new high of the day and keep the 1-minute uptrend intact, or we're going to fail here and form a 1-minute right shoulder. Glad to hear that, Mace. So 293.45 is the level that is being tested to try and confirm the 1 minute head and shoulders. Bulls playing defense. We broke it by a couple pennies, but no follow through at this point. If we do get that follow through, the 5 minute consolidation clearly underway. So it ended up playing out nice and well. But again, I wasn't even trading it, as I don't feel like dealing with the extreme fast first 15 minutes. But the two plays, we're looking for a higher low off the 1 minute support, or top fishing the high of the day, looking for the right shoulder. So now we zoom out and we look for a 5 minute higher low to form compared to 291. So again, best case scenario for me, looking for clarity. 5 minute trend change for the bulls, new high of the day. Zoom out, look for an hourly lower high, and watch for a loss of the 5 minute uptrend to make a bearish entry and top fish the high of the day at that point. Things could change over the next couple hours depending on how the setup unfolds, but just a rough scaffolding of a trade game plan developing. The VIX is testing its high, 49.50. We got up to 48.90. But it's still in a clear hourly uptrend. So what's a potential indication? Our 5 minute higher low has been set on SPY. We need to see a 1 minute trend change back to the bulls as a potential early indication. Again, I do not use the 1 minute time frame often, but this is not an often scenario. SVXY is shorting the VIX. Forget if it's leveraged or not. It might be 2 times leveraged. So in the end, we have rejected from our resistance. Yes, we broke it by 11 cents, but that's not convincing. We confirmed a 1 minute head and shoulders to lead to this fairly significant pullback from the high of the day. The low of the day is less important to me than 291 right now. We can still break the low of the day and form a 5 minute higher low compared to 291. Just watching this little 1 minute downtrend while 5 minute consolidation is underway. Low of the day test on Tesla. Looks like everything on my screen is frozen aside from SPY, which does not usually happen. Usually it's everything or nothing. So that's a bit odd. So back to the low of the day, but we care about 291. And if this pullback starts to get a little bit more follow through, we could start the morning with a 5-minute equilibrium. So if we drop down from here and break 292, I'm going to bottom fish 291 because the 1 minute and 2 minute time frame will be extended enough that I like that risk to reward. If we start to bounce and get back over 293, that trade goes out the window, and I patiently wait. GTII, it's a potential daily bear flag. Support is 843, so we are in a 4-hour uptrend, but that 4-hour higher low and higher high did not see any follow through. So when we get a trend change with no follow through, we zoom out and look for the potential of a flag. So it's likely today will be a daily inside bar, and if that inside bar breaks bearish on Monday, the odds of a potential bear flag increase a bit. Last hourly lower high on SPY, for me, I'm using the high of after hours. I'm calling anything under 303.96 as that lower high. So SPY fading down that 1 minute head and shoulders with beautiful follow through at this point. So I'm making an initial entry into SPXL, and I'm using 291 on SPY as my stop, and I'm just looking for a bit of a bounce to look for even just a 2 minute lower high. Maybe even just a 1 minute lower high. This is definitely a short-term trade attempt. So here comes 291 support. If 291 breaks on SPY, the next level we're looking at is the low of 285.54. Low of the dump from last week. So I can approach this two ways. I can sell looking for this bounce, I can move up a stop and say, okay, if 291.54, the current low, if that breaks, we're very likely to break 291 as well. So I can lower my risk on the trade by using the current bottom of this bounce attempt. Looking at the 2-minute time frame, I'd have a target of the upper 292s. I'll get back to the chat room in just a second. And if I wanted really low risk, I could do a break-even stop, but risk is still low either way, so I'm not going to move it to break-even. So SPY bulls now have to change the 1-minute trend to try and see this 5-minute higher low form. And I will be using 291.50. If we break that low, I will likely exit. Because if we can't change the 1-minute trend on this current bounce attempt, odds of 291 breaking will increase a good bit. Bulls need to get over 292.78 to see the 5-minute bounce underway. So SPY trying to get over 292.78 for the 5-minute higher low to be set. Nice follow through. I'm going to exit half of my position. And now I can put my second half of my position under the low of the day with 0 risk, and I will hold it for the entirety of this tightening 5-minute range to break, and if it breaks bullish, then I have a solid win. So just positioning myself now for no risk, all reward. So 5-minute tightening range as we patiently wait for that to break. The extended nature on the 1 minute time frame on SPY had a lot to do with my decision to make that entry. I always want to see a waterfall headed to support. And that's what we got. GNMK. 5 minute bear flag potential after an all-out dump. Daily time frame broke the high of yesterday by 7 pennies and then dumped, breaking all short-term support. So once we change the 5 minute trend and get an actual bounce going, we'll just be looking for an hourly lower high. We're just looking for a 5 minute lower high on any bounces. So bulls definitely losing a lot of the short-term momentum. Next support is really just 5 psychological. ZM looking for a bounce. Anything under the high of the day is a 5 minute lower high, but creating some decent space for a 5 minute higher low to try and form once the bounce tops out. Hourly broke that support that was ideal, 122.22. So again, odds of a daily inside bar increase a good bit with that support break this morning. Win on the daily. Definitely a gap down for buying, but again, like most names, we're just looking for hourly lower highs. So an after hours level to go off of is 96.31, and saying anything under 96.31 is an hourly lower high. It is a good sign that we changed the 5 minute trend just now, which is what SPY bulls are hoping for some bounce follow through. So hourly downtrend is now the most clear time frame. INO. 5 minute short-term support is 1187. If we break that level, we lose the 5 minute uptrend. And we then zoom out for the potential of hourly consolidation. So it's likely that INO is going to give us a 2 minute equilibrium here, which it already is. Bulls have to hold 1187 support here. And resistance just formed at 1265. SPY is not forming a higher low on the daily until we change the hourly trend, and we're nowhere near changing the hourly trend because we know we're just looking for an hourly lower high on any bounce. So bulls are going to have to control the entirety of today if we're going to get a confident daily higher low, which means we need to bounce through the morning to 296, very rough numbers, but just estimating, pull back for an hourly higher low midday, holding 291, and then a new high of the day into the close and a confirmed hourly trend change. So that pretty much means the bulls need to control the morning, they need to see healthy hourly consolidation midday, and they need to control the close if we're going to start saying our daily higher low is looking like it's set on SPY. So that's a lot of check boxes that the bulls are going to have to mark off. It's possible, but we need control all day, and I'm trying to leave myself with half of my position on my entry on SPXL there, just in case this hourly bounce does get follow through. All about the high of the day, 294.74. And NVC is testing the high of pre-market. So 1275 is a double top to the penny right now. That's our clear hourly lower high being tested. And plenty of space for bulls to give us a 5 minute higher low if we reject here, keeping an eye out for the potential of a 5 minute volume climax rejecting from that resistance. SPY was looking good towards the high of the day, but losing a bit of momentum now, so 5 minute equilibrium. Still in a 1 minute uptrend, so not a clear 5 minute lower high just yet. And again, I do not often use the 1 minute time frame for clues into the 5 minute time frame shaping up, but it's certainly gone very well this morning. both for the bears with the 1 minute head and shoulders, and then for the bulls with the waterfall towards support. Bulls testing the high of this bounce so far. So 1 minute uptrend remains intact with a higher high here. And now it's all about the high of the day. And bears can be looking to top fish the high of the day as well. So far, rejection by 30 some cents. Our 1 minute support on SPY is 293.30. If 293.30 breaks, then our 5 minute lower high is set. If I wanted to be actively trading my position right now, I could sell under the high of the day and try and reload on a 5 minute high or low, knowing that I might miss the bull move if they get impressive follow through. So many different ways to take it based on whether you want to be conservative or aggressive. If I was aggressive and held my whole position, I would certainly be up more on the morning right now. But most often I will be taking the conservative route. So looking at that 5 minute lower high is set, and we're now going to see, can the bulls hold a higher low compared to 291.54? There'll be another potential play off of that support level if we're going to continue tightening in a 5 minute equilibrium through the morning. And if I am going to make a play off that support, which I'm not, but if I were going to, I would want to see the 1 minute time frame just waterfall drop straight back down towards 292. So that's the second bear play using shorter term time frames this morning, just top fishing the high. And now we'll see if we get a second bull play off of support. And you could also just be patiently waiting for the break of the 5 minute tightening range. Congrats, Omar. SPY is not a 5 minute inverse head and shoulders because the head is not lower than the shoulder. And if you're looking at pre-market levels as well, it's the example where I said I don't like it because the right neckline is higher. Well, I see what you could be using. You could be ignoring that little 9 a.m. blip and looking at it all the way back towards 8 a.m. But if that were the case, we would have just broken bullish. I would just be only paying attention to the levels during regular trading for now in this tightening range. If I'm a SPY bull right now, I'm liking the fact that oil is dumping to lower lows and SPY is forming a 5 minute equilibrium, because that tells me when oil does get an hourly oversold bounce going today, which is extremely likely because the hourly RSI is 13, it's only going to help the SPY bulls. It's not dragging down SPY right now, and the bounce can only help the SPY bulls if and when it does get developing. So that adds a little bit of confidence for the setup on this 5 minute tightening range for me. Why would I prefer to see the 1 minute time frame waterfall down towards support? Because you get overextended. And when you get overextended, it's much easier to see a V-shaped bounce and some solid quick gains on support holding. It's the same thing. Imagine The analogy I give is bulls and bears being tired running. So bears are sprinting towards that support level as fast as they can. Imagine there's a wall between you and a bear, and that bear just sprinted a mile to get to you, or that bear just sprinted 50 yards to get to you. Its ability to get over that wall is going to be different. I want to see that bear sprinting for a mile, fail to get over the wall to get to me, which is a bounce off support. And when it's a downtrend and not a waterfall, that's the bear sprinting for 100 yards, taking a 10-minute break, sprinting for 100 yards. That gives it more energy as well. Support on PTON at this point. So low of the day, 24.36. 24.52 broke. 24.15. SPY bulls trying for their 5-minute high or low. Going to need a new high of the day to confirm anything. So for all that pre-market volatility and all that weakness, just a good old-fashioned tightening range to start the morning. Google and Facebook are the two tech major names that have dropped to lower lows on their daily time frame. So the next level for Google is 1250. 1249 and 1250 is a little double low from October of 2019. And again, on any bounce, just looking for hourly lower highs. So when I say, with our technical analysis and our trading, we're not predictive, we are reactive. I had zero intention of a SPY bullish entry this morning up until the bell rang. No intention. I was waiting for the hourly lower high. Then you give me a clear 5-minute equilibrium setup. I know that pattern. I've seen it 10,000 times. I'm comfortable. I see a clear risk level. My trade is defined, and I am reacting to the setup that I am given. Certainly would not have predicted a 5-minute equilibrium out of the gate. So we're looking to react, not predict. $294.42, $294.74 resistances. And if we reject from $294.42 here, I like the 2-minute time frame better than the 5-minute right now for this current setup. More details. And my stop, I'm going to move my stop up to 292.61 on this current setup, just to ensure further profit worst case. Because again, if we break this 2-minute pattern bearish, the odds that we head back to the low of the day will increase fairly significantly. And that's just me continuing to choose the more conservative route. You notice my big deep breaths? That's obviously because I'm talking, but it's important to regulate your breathing. There are many situations in life where our mind gets too sidetracked and too focused on something and we stop breathing in a regular pattern. And then next thing you know, 20 minutes later, we have less oxygen going to our brain. We feel a little bit lightheaded. We feel a little bit off. Whenever I feel a little bit off, the first thing I constantly do is deep breaths. When playing SPXL, have I noticed it's best to enter at the beginning or end of the minute? No, I'm not paying that much attention to candle closes. So if SPY breaks the high of the day here, if we're going to get follow through, we must see QQQ and XLF break their high of the day. Right now, XLF is still a good bit off from its high of the day. So if we break these resistances, have to keep in mind that if XLF is not going to join the party, SPY bulls are not going to get a ton of follow through. Nice bounce on Tesla. Tesla's just an EQ as well. It's a wider range, maybe the 15-minute time frame best. I'd be watching for a 15-minute lower high compared to the high of the day unless we see some 5-minute increasing bull volume. So WTICOUSD is looking for a 2-minute trend change. So you could potentially bottom fish the low of the day looking for a 2-minute higher low to try and see some oversold bounce get going. Keeping that risk nice and low. And again, with where SPY is positioned, if oil gets an oversold bounce going right now, it's only going to help. Looks like SPY just rejected from its first resistance level. We broke it by, well, broke it by a decent amount, 18 cents, but didn't break the high of the day. So we broke one resistance level, not the second. Certainly gives the bulls a bit of a short-term advantage, but we also certainly need to see that follow through and that new high of the day here in the near term. The longer it takes for this new high of the day, the more confidence the bears are going to get, and the more the confidence is going to erode from the bulls. That's why on equilibriums, we always want to break multiple levels on the same move to eliminate that doubt of the break. Right now, by only breaking one level on SPY at the moment, there's a little bit of doubt. Checking back in on that gold 15-minute equilibrium that was setting up, and it's a beauty. Lower high, scouting a higher low, looking for a break sometime within the next 2 hours, which will have a significant impact on the miners short term. So if I were trading miner, that would absolutely have gold 15-minute time frame up on a screen. SPY bulls giving it another test. Want to see them get right up to 295 to eliminate any doubt. Just rejected by 6 pennies. Bears still trying to defend resistance. I got a whole bunch of private messages. I'll look at those when I can. Big old bouncing airliners. Let's see what the hourly trends look like. Certainly creating plenty of space for hourly higher lows when these bull moves top out. I'd also be keeping an eye out for a potential bearish entry. Looking for some consolidation on those names. Just looking for 5-minute higher lows, but extended in the short term. So SPY is still failing. That's a double top of the high of the day by 6 pennies. So at this point on the morning, pre-market, we topped out at 294.63. High of the day initially rejected from that level by 14 cents. High of the day then broke that resistance by 11 cents. And now here we are, a third rejection right in that same range. So I'm looking at 4 rejections, including pre-market, all within a 14-cent range. Bulls really need to clear this level for this hourly bounce to try and get some follow-through. And if we can't, then obviously the bears remain extremely comfortable. So again, I've moved my stop loss up. 292.61 is now the most important support level for me. So bears keeping some short-term control for now. Two-minute time frame, higher, low, anything above 292.61, which is the level I'm going off of. So XLF 2563 is the resistance level we're watching. Bulls with another attempt at resistance. And that is a very clear gold 15-minute equilibrium break. How about that follow through? In the end, big picture, we're just looking for a 4-hour higher low compared to 1633. But it is a clear double top as far as I'm concerned at that high. that reaction increases the odds for me that SPY is going to break the high of the day. And I'd like to see this oil bounce a bit, get a bit of follow through as well. Oil's in a 2-minute tightening range. Just held a low of the day by 5 pennies, testing 2-minute lower high resistance. SPY bulls at the high of the day. So gold bear break, oil oversold bounce attempt, and SPY 5-minute bull break attempt. Looks like we got a big, quick spike up over 205 or 295. So my trade game plan from here for the rest of my SPXL position is just walking up my stop with every 5-minute high or low. This is also exactly what I wanted to see while looking for an hourly lower high, because I can do the exact opposite, where when the 5-minute uptrend is lost from here, whenever that happens, I look to top fish the high of the day, looking for hourly consolidation to need to take place. And I can do that in multiple ways. I can wait for a loss of the 5-minute uptrend. If I see a head and shoulders set up, last week that happened twice to give us a clear 5-minute head and shoulders to indicate hourly lower highs and consolidation was underway. So I'll see if I get any trades that come to me, but at this point, just babysitting this SPXL. Nice to see this bounce follow through. Oil testing 2-minute resistance and gold pulling back. So gold gave us a little signal. I guess SPY broke the equilibrium first level first, but gold added the confidence that the new high of the day was likely. And a nice little follow through. So bounce underway. Hourly lower high is the most likely scenario for most individual names. And bears are potentially watching for hourly lower high entries if they're looking for weekend swings for headline exposure. Just be aware of what happened last week with the huge bull move into the end of the day and the over the weekend bear play not panning out. Hope you had a good morning. And hope you have a good rest of your day. Jason will be live this afternoon. And I will be back in the chat room in 15 minutes to continue coverage.